Welcome to the Accountancy Learning AAT Sample Paper Debriefs. I'm Sarah, and in this video I'll take you through the Principles of Bookkeeping Controls Sample Paper 2 Task 5. So this one is all about using the journal. Mark runs a small ice cream sales business. He has produced accounts using a spreadsheet up until the 1st of January 20XO, but now wishes to start using an accounting system. The following items need to be included as opening balances in the new accounting system, and we're given a number of items there. Part A asks us to complete the journal below by entering the opening balance in either the debit or credit column. So we need to identify whether they are a debit or a credit balance. So we can do that by making sure that we keep in mind our dead click. So let's look first, capital. So capital sits on the credit side. So 12,126 credit. We've got the ice cream van, so the asset, that's on our debit side. 12,000. The bank, importantly, is an overdraft, so it means there's no money in the bank. It means we've gone into our overdraft, so that then is a liability. So don't always think the bank is an asset, it can also be a liability. So that is on the credit side. And inventory is another form of asset, so you will have that on your debit side. Now there's two ways that you can actually check your answer is right here. First of all, the journal must balance. So when you add these two up, both of them come to 12,220, so they balance. Or you can also use the accounting equation. Your assets minus your liabilities equals capital. So you will have 12,000 plus 220 minus 94 equals 12,126, which is your capital balance there. Ranveer runs a small accounting practice. He has recorded the following year-end journal in his accounting system, and we can see there that we have a bad debt write-off journal. The receivables ledger control account has a closing balance before processing this journal of 1,367 debit. After the journal is processed, what will be the revised balance carried down on the receivables ledger control account? So this is writing off a debt, so it means the money will no longer be owed. So our balance was 1,367, and we're going to credit, so we're going to take off 320 because we're writing the debt off, which means the revised balance will be 1,047. The final part of this task then is Arthur employs 8 people in his business. At the 31st of March, he needs to prepare a journal to reflect the following information. And we're given some payroll information there as to what's been paid to employees and what the income tax and national insurance contributions are. So we've got a journal at the bottom here that we need to consider. So looking at gross wages then, so this is how much does it cost the business to employ that person. So what are the employees' gross pay? So we're going to simply take that from the top line, and it's an expense to the business. So this is going to be an expense. So it's going to go on the debit side of 11,334. The second line of our journal is we've got employer NI. So the employer NI is also an expense to the business. So if they didn't employ the staff, then they wouldn't have to pay it. So it's a compulsory expense of the business for employing staff. So we've got the employer's national insurance contributions of 192. So again, it's an expense, so it's going to be on the debit side. Now for the final three, these are all going to be liabilities. So these is what's going to have to go over to HMRC. For these two here. And this is actually what goes into the bank account of the employee. So looking at the PAYE, so that is your income tax. So for that one, it's just the £658. That's how much we have to pay to HMRC on behalf of our employees. Now, national insurance, we have two lots of national insurance. We have the ones that are deducted from the employees, and we also have the employer's contribution as well. So we will have 625 from the employees and 192 from the employer. So our total liability is 817. Don't get this confused with the expense. The liability is only what we have to pay to HMRC, but the actual expense to the business is only 192 because the rest of it comes from the employee's pay. And then the net wages. So net wages is going to be the gross pay for the employees. We're going to take off the income tax, and we're going to take off the employees' NI as well. So 11,334 less the PAYE and less the national insurance. And again, this is a liability because the business now needs to actually pay from their bank account the net wages to the employees, and until they've actually paid it, that remains as a liability. That completes task 5.